Hello and welcome once again to your weekend review and week look ahead. Will Hassel here. Had a kind of a shaky start. Well, not really shaky, but kind of interesting move this last week in the markets. Because of the large amounts of snow here in Huntsville, Alabama, I was able to watch the markets from about Tuesday on to Friday, safely at home on my home layout that I have. So I was able to pay a little bit more attention than normally I do when I'm at school and I only have my laptop and not a whole lot of free time to really digest some of the moves in the market and to really, get in some of all the news that I normally can. It was kind of interesting because we started out the week kind of flattish to the upside because of some fears over some of the data coming out from Asia, specifically China. And those fears kind of got draped away when on Tuesday, Miss Janet Yellen went and did her first kind of question and answer session as the Federal Reserve Chair to the Congressional Committee, and kind of laid out some of her policies and notes early on that morning. And that's what really got the markets to jump, as we see throughout the main three indexes here. That's why you see that kind of big uptick, and then on Wednesday we kind of had a little bit choppy data, along with Thursday, but and kind of Friday we pretty much the entire week we had choppy data except on Tuesday, if I remember right. No, it was on Friday where we had the bad data, then we had the good data. It was kind of this whole kind of choppy data mishmash that was going on, where we had some good data from overseas, some bad data from overseas. And like on Thursday, when we initially had some bad data, and then we got good data released after that. And that's what you see in these kind of big kind of market kind of comebacks going on Wednesday. But yeah, that's really what kind of happened right there. It's just a whole different mix of data. We had the Time Warner deal when it happened, and a whole bunch of talk of that kind of came on, which was basically Time Warner and Comcast are now merged for $45 billion in all stock. It kind of came out of nowhere. And really boosted the stock. Still don't know if it's actually going to go through or not, if it's going to be ruled as a monopoly or not. And then we also had on Friday we had Joseph A. Banks agreed to buy Eddie Bauer. It's not really a big deal. Kind of a weird deal because they've been trying to be acquired by. They're trying to merge with Men's Warehouse, so it was kind of like a weird deal type of a thing. I think all these recent deals are a good sign. M&A is back. But when we look at the Dow Jones, it did clear above most of its averages. It's 50 and 200-day. Caught a little bit of slack towards the end as we sold off, so it's below its 21-day moving average. But it was nice to go and see some of those, some nice momentum into the market, even though, I may not totally agree with some of this big momentum that's coming in because we still have some bad underlying data. But at least we know the Fed policy is going to stay the same. I don't think anyone was really predicting that Janet Yellen was going to come out and say, yes, we're speeding up bond buying, tapering or not. But S&P finished just about the same as the Dow when it comes to its simple moving averages, strong technicals, strong momentum. This next week will be pretty important as we start coming out with some of these numbers that will really gauge if it's this kind of winter weather is causing all these bad numbers or not. We had GDP come out on, I believe it was Thursday, and it came out lighter than expectations. Because inventories were strongly built up, but they're also saying no, it's because of the weather, and it's all been kind of this whole weather mishmash data things. And here's the QQQ, slightly above its 50-day moving average, not by much though. I'm going to start diving into this week's economic data and kind of world economic events as we started getting into one of the things that I think is going to be a huge theme for 2014 is China and Japan, making sure that over in Asia the second and third largest economies actually are doing pretty well. I am recording this on Sunday night, and we did have Japanese GDP data come less than expected, which is driving down Japanese stock prices. We are closed on Monday due to President's Day, so we are kind of at the mercy of Asia right now, Asia and Europe, as they will be the only markets that are open, and some other American markets, not the United States. So coming into here on Monday, Japan already released its fourth quarter GDP numbers, but that's pretty much all that's going to happen. It'd be Monday for us. It's Monday for them. It's already happened. For Tuesday, we have the February housing starts, and that is a estimate of 950,000 versus the last period of 999,000. And then we also have January PPI, which is the estimate's going to be up 0.2% versus the last period of up 0.4%. On Thursday, in terms of economic data, we have January CPI of estimates of up 0.1% versus the last period of up 0.3%. January leading indicators, we want estimates are up 0.4%, and last period would be up 0.1%. On Thursday, we also have the February Philadelphia Fed survey, the Philly Fed survey. The estimates are 10 versus last period of 9.4. And then Friday, we have January existing home sales of estimates of 4.77 million versus last period of 4.87 million. And also on Thursday, we do have the jobless claims, which will be released. On Tuesday, in terms of kind of different world events that are happening, the Central Bank of Turkey holds monetary policy committee meeting. I kind of want to pay attention to this because we had at the early part of the year, that whole entire down move was basically based on Turkey and saying, oh, Turkey's going to, based on the Turkish lira. So, we're going to want to pay attention to what the Turkey Central Bank says when it regards us, because they said that this cutting out of QE actually caused this whole move in the Turkish lira. And then also on that day, the Bank of Japan announces monetary policy after a 2-day meeting. So the Bank of Japan will see if they're going to continue using Abe's arrows and how effective those are. And then on Wednesday, we have minutes from the Fed Open Market Committee's January meeting, and it's the former Federal Reserve Chairman, Mr. Ben Bernanke's last are revealed. So this is the last minutes of the Bernanke administration, if you will. And then on Thursday, Japan reports January trade data, which is becoming more and more important in my eyes to go and see, kind of how the rest of the world is going. Because if we keep getting this kind of mishmash data here in the U.S., we can see some real problems. If we end up not being the brightest patch in the world. I'm going to switch over to my portfolio here as we look at JPM, AIG, which kind of reported interesting earnings, and then finally and then I have Starbucks and Michael Kors and Hedge later. I've already done QQQ. JP Morgan pretty much went up with the broader markets. No real news coming out of the different banks, really, other than Goldman actually had an interesting couple of days, because it was the Dow leader on Tuesday there on that kind of monetary policy day. Really, no real news came out of that day, which was kind of interesting when you look at the chart. It was up dramatically versus what it normally was. It did finish above all of its simple moving averages, just kind of framing Goldman there for the move, because it kind of broke this kind of downtrend that it was having. JP Morgan, like the markets, finished above all of its averages except for the 21-day. Like I said, no big news coming out there. AIG, I don't really know what to say about AIG because it was looking pretty strong following the broader markets throughout the week, except on Thursday when it reported earnings. The CEO came out and kind of said, one of the reasons why we're in profit is because we're cutting a large number of jobs, but they did have good earnings and they are increasing the dividend. And you saw a kind of interesting, funky move of it on Friday where it kind of opened up kind of below and then just kind of continued below and ended up finishing down on 1.3%. But we did see it, and after hours jump to like 52-ish, which in all reality I did really want right before earnings, really wanted to buy some more and then go and sell it when it hit, some of the 50s. I wish I would have. Although I do think that it was actually a pretty good quarter from what I could tell. And I just think it's going to take a while for the IG earnings to actually digest as you look at just getting past the jobs portion of the cutting, and hopefully the raising of the dividend will increase some of the kind of feelings about it, because lately it's been dividend companies that raise dividends that everyone likes. Visa performed well with the broader markets as it is a member of the Dow. It did finish up all above its simple moving averages, did get past that key resistance level of 23 and 24, and really wanted to see 25 really 225 really bad on Thursday, but wasn't able to do it, but broke through on Friday, as we see right here. It broke out and then just continued on and stopped just below 226, and then another 226. Now this coming after its kind of weird downturn that it had for a large period of time. I'm sorry, my sister just got home. I apologize for that. Looking over into Starbucks, had really kind of no news. It was one of the kind of weirder stocks that I had in terms of just kind of trading through that entire week. Just kind of stayed out where it really was. Although it has been looking strong here, if we start moving out to the 10-day, it has been looking pretty strong. It's been hovering around this 75 line for quite a while. I'm going to go and move it to the 30-minute and see if we can go and broaden this out. What I found really interesting is that it kind of started off, it's getting nearer and nearer to where it had this earnings gap, if you start looking at it at the middle of that candlestick right there. And it had been looking for a while right up until here that it was going to stay right where it was when it reported earnings, but then start to decline a little bit, but then start to look stronger again, which I found was really interesting because just from the lack of kind of news that was coming out and how it's just been a better relative performer than some of the other stocks, and it's, as it's been compared to, other than like Green Mountain, which has had some extraordinary news come up, and that's why it really raised. But so Starbucks kind of had an interesting week. It has been showing some pretty good strength lately. It hasn't really dipped too low. It's just kind of been this 74, 75 range this entire week, and I think until we break through that 75-30 range, I don't think we're going to see another really move higher. Definitely not into the 80s. Until then, we have to get past that kind of earnings high of 76. So moving on to Michael Kors, and then I'll highlight a couple stocks that I've been looking at. Michael Kors went and broke some new 52-week highs here on Thursday, and I thought we might have gotten a little bit of action of it on Friday. It didn't really do a whole lot on Friday, just kind of stayed negative and then just kind of squeaked out positive there at the last minute. But Michael Kors has been a really strong performer this entire year, really. Other than earnings, it's just been kept going up because it's one of the only places in retail that you can actually find strength. And we saw that even on Wednesday when we had that kind of down retail sales number, people fled. I think it was either Thursday or Wednesday. I'm sorry, my memory's kind of fading right here. But no, it was Thursday when we got that kind of mixed down retail sales number. Michael Kors was really a leader there because people know that Michael Kors is one of the strongest retailers out there because of the quarter. So you saw a whole lot of people kind of flowing into Michael Kors because of that strength that it has. Looking at my time here, I'm going into some other names that have been kind of in the news. Apple, with the whole Carl Icahn dividend thing. Really, once again, as I've kind of been picking up on and off of this for the past month or so, really hasn't been doing a whole lot. Let's be completely honest here. Look at it in the past 20 days. Other than when it launched down from its quarter, it's almost right back to where it is, just on sheer Carl Icahn, Tim Cook dividend mismatch, stuff like that. It's everyone, from the guys on CNBC to a lot of people I talk to with leaders and stuff like that. I mean, it's range bound. It really is range bound when you start looking at it. If we go to a daily of of an 11 month let's just do a year chart. You're to see it's been kind of 500 to 550. It's just been trading in there for forever now to the tops of 576. It's just been in this whole kind of, we buy it at 500 when it starts dipping below there and it ends up going to like 525, or it's just been this kind of repeating thing. And I mean, I'm sure a whole lot of traders out there, my advice would be to trade it, and keep that 500 to 550 range in mind, because you can make a whole lot of money just bouncing it up and down there. Now, I don't do that because I don't have an option account, and I don't have the capital necessary to actually do that, to just trade Apple outright in terms of stock. Another stock that I've been kind of talking about, which is one of my things I've been showing up for the year, is Dow. There was some mixture out about Dow did kind of bust down. I'm trying to remember David Einhorn from Greenlight Capital's plan to kind of split the company and change the name. Didn't really follow through with that. Stock kind of went down because of that. But overall, I think Dow's going to be one of the better performers that we've seen here. It had a really strong quarter. And I think the chemicals are going to be where it's at. It's got a whole bunch of natural gas and all this, and all kind of the energy field as well. So it will kind of perform well with all the rest of the natural gas space. Another company that I'm going to highlight because it is natural gas is LNG, Cheniere Energy Corp. Now, full disclosure, I have had some trouble trading this in the past, although it has been a relatively good performer here this last kind of year. I don't want the monthly 1 year, I want the daily 12 years. Has been really good, and as we start seeing natural gas become more and more apparent into our energy our energy consumption, it's going to continue in all this. I think the next kind of quarter is going to be really good for LNG because higher natural gas prices mean it's most likely going to get, a better quarter just from the margins and stuff like that. They are the world's largest liquefier of natural gas, and that means since it's liquefied, they can export it. Japan is a key for LNG because since the nuclear reactors are kind of offline, or Japan's starting to ease into getting more of the generators back online, that they're importing a whole lot of natural gas, and the world's largest natural gas liquefier, and that's how you transport it overseas, is LNG. So, that's where you kind of get that kind of niche play of, the export of the natural gas kind of thing. And until we start changing over, into more natural gas. This is really kind of one of the only solid plays besides Dow. A company that I could have actually showcased is Under Armour, which had a phenomenal quarter, then kind of went down on, as soon as I bring it up to this chart, on Friday, I believe. Yeah, on Friday, because of this whole the Olympians not actually using the suit. They changed suits, which I'm just going to come out here and say it. I think this is a great time to buy Under Armour. It really is, You go and you start looking at the multiple days with the quarter and stuff like that, and it's really performed quite well. And this is kind of the only real pullback that you've seen. It's been above this 1.8 level, which seems to be pretty key as I start looking at went above 1.8, kind of went up, down, and then kind of fought back. Yeah, looking at that 1.8 level. I'm sorry, just trying to. For me, sometimes it's a little hard to remember to think out loud as I do some of these videos. I was just looking at, where some of these levels of support might be for Under Armour. Just waiting for Scott trade now. Just looking at it, yeah, it looks like this 105 level too has been kind of 106 level has been kind of key. Looking at just kind of this pattern of the candlesticks bouncing up and down the 106 line. I know it broke that 108. I mean, gonna go and throw up my detailed quote here just to find exactly how much it was down on Friday. I believe it was around 2%. Yeah, 2.3% down, and after a quarter like that, I don't see why, it isn't a buy. I think I'm just gonna throw this out here. It's gonna be one of my stocks to really watch for the next quarter or two, because of the size of this good quarter, and as long as the weather is still kind of being bad, they came out with all this kind of thermal gear, so you're going to see those sales continue because it has been cold. And I think this is a great pullback here. I think we're probably going to see, it's going to see at least 110 here coming near it. I mean, it stopped right at that 110 line as we look over here on like 2 Fridays ago. It kind of stopped out there at that 110 line. So, I mean, there's at least a $5 worth of upside before it gets to that resistance level, that 52-week high. So, I do think it's probably sold off a little too much based off of overreaction onto this news. So I do think it's going to be one of those ones that you're going to want to buy based off of weakness right now, weakness in terms of price performance, because it's probably going to keep going. I mean, the quarter was fantastic. It was one of the better quarters out there. And at this point, I would just like to go and thank everyone for watching my videos, for following me on Twitter, StockTwits. As always, you can please email me any questions that you might have, or tweet me, or send me a message on StockTwits. You can do that to me at any point in time. I love getting questions. I love answering them. Please go out and follow all the members of the Losers Investment Club. We have some great members who really go and do some great stuff out there. Ben Banks, Julian, everyone that goes and puts out some really, really, really good articles. Chef Chin just kind of put out a very interesting article about long-term stock strategies. How are those actually relevant to people my age? So, I recommend you to go on Leaders, because there are some great articles, great insights there. I post all my videos there as I am a content contributor, and just kind of explore, because there are some people out there who do this great work, and I don't think they get enough recognition for that. So please, if you go and watch my videos on leaders, do go and look up some of the other leaders members on there. And with that, I'm gonna say see you next time.